Hello traders, welcome back to the Forex Gig where we dive deep into the tool that can help you make smarter trading decisions. In today's video, we are going to be talking about the value area trading strategy, a powerful approach that can help you identify key price levels where the majority of trading activities occur. Whether you are looking to capitalize on price reversion, breakout, or a trending continuation, this strategy offers valuable insights that can enhance your trading performance. So stay tuned until the end of this video to learn how to apply this technique and improve your trading outcome effectively. Now we start by understanding the value area trading strategy, which revolves around identifying price range where majority of trading activities occur. This range, known as the value area, represents the equilibrium in the market where buyers and sellers agree on a price. It is a crucial concept for understanding the market behavior and finding high probability trade opportunities. The value area is typically calculated using the volume indicator, which shows where 70% of total trading volume has taken place during a specific time period within the range. And there are three key levels you need to know. First of all, let's add our fixed we need to add our fixed range volume profile by drawing it from the low to the high. This would help us to understand this concept a little bit more. Okay. Alright, from the diagram, now let's explain our key levels. The value area is one of the key levels. The value area high is the upper boundary of the value area. It is often as a resistance level because it represents the highest price at which significant trading volume occurs. When price approaches this level, it it makes or when prices approaches this level, it may struggle to break them, though, and it could reverse back into the value area from this level. Imagine a chart where price moves up to touch the value area high but fails to break it. When price touch the value area high but fails to break it, when price fails to break it, this rejection signals that sellers are stepping in at this level. That's what it means, that when price steps to this value area high, it means that sellers are stepping in at this level, making it a potential short selling opportunity or a signal to exit long trades. The second one is called the value area low. The second key level you need to know in this indicator is called the value area low. And the value area low is the lower boundary of the value area. It often serves as a support level. This serves as a support level because it represents the lowest price at which significant trading activity occur. When price approaches this level, it may bounce back into the value area. When price approaches this level, it may bounce back into the value area. In this scenario, we can see that, let's look for a proper scenario when price bounce off the value area low. Drawing our indicator from high to the low of this chart. This is not that much of a good example. Let's look for a better example, drawing it from the low to the high. Okay, this is a perfect example. This is a perfect example in a bullish scenario. From this picture, a scenario when price drop to the value area low, we can see that at when price drop to this value area low, it finds a strong buying interest, pushing it back towards the middle area of the range. This could indicate a good entry point for long trades or a signal to close your short trade position. Now, the third key level you need to know about is called the point of control, where the point of control is the price level within the value area that has seen the highest trading volume. It acts like a magnet for price action. Price tends to gravitate towards this level during period of consolidation or of low volatility. As we can see, this area is the point of control, and price tends to consolidate towards this area, and it holds the highest volume or highest trading volume, as you can see from the volume indicator within this our indicator. On our chart, you might notice that price oscillating around the price of around the point of control area before making its next move. You see price is moving around this area before it makes its next move, whether to the upside or to the downside. This behavior can help you anticipate whether price will break out or stay within the value area. To identify this level on your chart, you need to use a tool like the volume profile indicator available on most platforms such as your trading view. Simply applying this indicator to your desired time frame will automatically highlight your value area high, your value area low, and your point of control. This is what this indicator would help you identify. Understanding this level is crucial because they provide clear zones. They provide clear zones for potential support and resistance and trend continuation. By mastering how to read and interpret this area, you will be able to make more informed trading decisions with greater confidence. Now let's see how we can trade using this strategy. We explore the three effective ways to trade using this value area trading strategy, each offering a unique opportunity for different market conditions. Now, the first way we can trade using this strategy is called the reversion to mean trading strategy. I repeat, it's called the reversion to mean trading. This happens when price move outside the value area. When price move outside the value area, looks for a let's assume that price move outside the value area. This often tends to return back to the point of control. When price moves outside the value area, it tends to return back to the point of control, which is this center line, this blue line we can see here. This creates opportunity for mean reversion trades. Let's take an example. An example is when price pushes above the value area high. Look for a rejection signal like a bearish candlestick pattern. This is a bearish pin bar. Or we can look for patterns to combine with overbought conditions, and this signal can potentially signal short trade entries, and our target should be to move back to the point of control. So if we see our signal at this area of our value area high, if we see bearish signals at this area, we can take a trade from that area back to our POV, which is our point of control, as you can see from this chart. Similarly, when price drop below the value area low, we watch out for bullish reversal patterns. When you look for bullish reversal patterns, you combine this with oversold area, or you can combine this with oversold condition, and you have to watch out for a bullish reversal pattern. This signals that price can potentially go to the upside, and you should also look for long positions because price will definitely return back to the point of the point of control. Similarly, this is what the trading setup for both the bullish and the bearish trading opportunity can present itself the using our reversion to mean trading strategy. Now the second strategy is called the breakout trading strategy, and the breakout trading strategy involves the value area breakout that occur when price move decisively beyond the value area high or the value area low with strong momentum. So at this point in time, we are looking for where price would decide to move, break out from the value area high or break out from the value area low. This is what we are looking for. How do we trade this strategy? As you can see, price broke out from this upside. Even if it came back down, it broke down from this downside and continued towards the down area. Let's use this particular chart for this example. First of all, we wait for a clear break of either the value area high or the value area low. When we see a clear break, we confirm the break with an increased volume. So we can use our volume indicator for this strategy. When we see an increase in volume, as you can see, when price broke out from this value area low, there was an increase in the volume. You can see at this area of the market, the volume was increased. To enter the trade, you have to enter trades in the direction of the breakout. You must enter your trade in the direction of the breakout. You place your stop loss below the breakout level for a long position and above the breakout level for a short position. Meaning, if we take a trade at this area, our stop loss should be above the breakout level. This is what it means. Now let's look at another way we can apply this strategy, and it is by the trend continuation trading. When price consistently trade above the value area high or below the value area low, it often indicates a strong trend. As you can see, price broke below this. Let's look for a clear example. A clear example will start from, let me remove this trade. We'll use our indicator. We first mark from the high to the low. When we mark from the high to the low, we see that price broke below, and if we mark the trade again from this area, this present high and the present low, you can see price still broke from this area, showing that is a continuous pattern. This is what it means, that is a continuous pattern. We are actually trading the continuation to the downside. Now, how do we trade the trend continuation pattern? We trade the trend continuation pattern by first of all looking for price to stay above the value area high for an uptrend or stay below the value area low for a downtrend. You have to wait for price to first of all pull back. Price has to pull back to the value area high or the value area low for your entry opportunities. Let me give you a live example. This is our value area high. Let me redraw this. We draw this indicator from the high to the low of the bearish chart. When price constantly stay below, when it stays below for stays below the value area low, it signals what is called a downtrend. When price constantly breaks the low and stays below that, that's how we trade the trend continuation for this strategy. First of all, we have to wait for price to pull back to the value area low or value area high for entries. In this case, price has broken the value area low. We wait for price to pull back to the value area low for a retest. Let's not forget, if you want to enter the trade, we enter at the retest. When we enter at the retest, we keep our stop to protect the behind of the value area boundary by putting our stop loss below or above the area at which we took the trade from. Our target should be the next significant support or resistance level. We can target this area at which price broke and reversed from. This should be our take profit 1, or we can target a previous support or resistance level on the chart for this trading opportunity. Now, remember, risk management is very important. We have some guidelines on how to manage our risks. We have to always protect our trade with a proper risk management. So the first step we need to do in protecting our risks is by setting stop loss behind the value area high for a selling trade or for a short trade, while we put our stop loss behind the value area low for a long trade. Secondly, we use a minimum of 1:2 risk to reward. So when we are risking 40% of our account, when we are risking 20% of our account, we should gain 40%. If you risk 20 pips, you should gain at least 40 pips. 1:2 is an ideal minimum risk to reward ratio that we should be aiming for. The third rule is to confirm our position size according to our risk tolerance. Do not forget, never risk more than 1 or 2% of your account. At maximum, 2% of your account should be what you should risk per trade. Never risk more than 1 or 2% of your account on a single trade. Remember that the value area provides natural support and resistance level, making it easier to define your risk parameter and your profit target with precision. Alright traders, I believe we have come to the end of this video. Engage with us in the comments below. We want to hear about your trading experiences. If you found this video helpful, do not forget to like, subscribe and share, and turn on this notification bell so that you would never miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.